Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for November 27th, 2018. And we're talking key levels. Right now, we're in a major inflection point for the S&P. We'll take a look at it on its daily chart, volume profile chart, probability of expiring chart, and the like to create a dominant thesis and an alternate one. We'll also pick up on the levels in the Dow, in the Nasdaq, and finish up with the Russell. Mainly what we're looking at is this play off of the 2630 level. It's roughly the dawn spot at 2626, and it's been a key pivot point recently and to an extent for the bulk of 2018. We're now pushing up away from it. On the short-term play, this is expected, and now we are going to frame the rest of this week, especially this week after the holiday, in terms of the departure from roughly 2680 in the S&P futures. Going back, we can just see that this is a critical level, both as resistance and support, and maybe resistance. Mainly if a breakthrough takes place. We do have upside targets, but we'll be looking for any type of sell swing activity tomorrow and for the remainder of the week. That will be considered a departure play. That's what levels are. They're not predictions. They're just making a note of where the markets have hit, reversed in the past, hit, and may reverse as we see them now into the future. It's just a plan after all. So the main level for the S&P now is again 2680. If we do see a rally breakthrough, we'll probably instantly, maybe even on a trend day or trend event, see a move toward 2700. Above that, it takes us to first 2730, maybe even 2740. And these will be on the bigger picture daily chart levels. We can then take a look at what we call the volume profile levels. And that's just basically where volume has transacted. It has created a profile. Think of this like a distribution. So these are high volume nodes, and this pocket, as we call it, is a low volume node. So if the market can push a little bit higher, it probably does trigger a rapid swing higher. We do see an overlap with this special red bar. It is called the point of control. It does overlap the 2727, 2730, and 2731 S&P level. So that will be a play toward roughly 2730 if sustained above 2782. That's our bullish if then. However, the bearish if then takes us on a departure lower. And we have a couple of examples of this Tuesday and then Wednesday into Thursday for Thanksgiving. That's the play down away from the spot back toward 2630 and 2626. We're not going to predict, but if we had to say a dominant thesis, given volume, given internals, given the overbought nature of the market and the resistance point, probably would say the dominant thesis is for a sell swing activity. Thus the alternate thesis would be a bigger move straight up in a trend day, similar to what we saw on these trend days down, trend day up, trend day down. That's the concept of an open air pocket gives us rapid movement. And we just trade these either as a swing trader above roughly 2685, 2690, and the expectation is for a rally up to 2700, 2730. However, a sell swing takes us lower, so be prepared for the plan and how you'll engage your trades, put calls, futures, ETFs, individual stock positions, whether or not we get this, say, expected downside action, or maybe unexpected trap or short squeeze action higher. On the Dow futures, just looking quickly at it, I made the chart here to show those pathways. So any breakdown beneath, roughly speaking, a 24600 in the Dow mini futures does open a sell swing pathway down to about 24200. That's the downside move. We see volume weakening, but the upside play takes us through a pocket, an open air spot, to what about 2500, and if above that, 25200. On the Nasdaq, it's a little bit different because it is into the overhead resistance of this little pocket we're playing into. So again, watch these areas closely. The Russell sits on its value area extreme. That's about 1490, and the point of control is roughly 1500. The upside pathway takes us to 1529. It's a price pivot and the yellow value area extreme. Otherwise, open air pocket and downside activity quickly or rapidly if beneath 1490. We'll take a look at these just quickly on the daily chart, starting with the Dow futures. Lots of lines on the chart, but you can see the bullish upside pathway takes us here, and any downside sell swing takes us to 24200 or just 24,000. Nasdaq, similarly, we are into our spot marker pivot just above 6,700. Above that, 68, maybe even 7,000. And the Russell, which is a little bit weaker, is playing off of its 20-day exponential. Just take a look at the S&P on its expected move grid, and we can see that going into, we'll go out to Friday here. Now we'll take a look at the expected move for the rest of the week in at least the S&P futures. Taking a look into Friday, 3 days out, it is about 48 points up or 48 points down. And by Friday, that 48 points up or down could take us through to either of these spots. We'll finish up with the way to look at this in a different direction, and we'll finish up with looking at our cone of probability for expiring. Just a different way to look at the same information. These are the gravity spots, the green levels that we're watching that have been resistance and support. We are playing up away from one currently. We're into 2681. This is into the end of the year, into December, and that takes us up to just shy with one standard deviation, 3,000 or 2,400. Simple math, I know, but mainly focus on the next swing in the market. Don't go too far out, especially for this level of analysis, of where the market will be trading and if these support levels hold. If above 2681, we do probably see 2,700, 2,731, and if we get above that, we're looking at a similar event to earlier November. But keep your game plans, expectations, levels, and of course any option trade or intraday futures trade within these contexts, these levels, and an unbiased expectation. Take care. This is Corey Rosenblum for the Theo Nightly video for November 27th, 2018.